Hi, I'm Megan Clubb, President and CEO of Baker Boyer Bank, and joining me are Mark Hess, Executive Vice President and CFO, and Mark Kajita, Senior Vice President, Senior Fiduciary Officer, and Portfolio Manager. We've been having a lot of discussions about the situation with increasing the debt ceiling, and we wanted to share our thoughts with you today, as well as talk to you about how we're working to protect your deposits and your investments. I'm going to begin by talking about the current situation in DC, and I'm definitely not going to get into the political aspect, but at my last Federal Reserve Board meeting, there were several economic issues that came up that I thought was worth kind of sharing today. Obviously, the United States is on a path with long-term deficits that's unsustainable, and the consequences of us not getting our debts under control are pretty significant. One of the first ones that I know we've been talking about has to do with confidence, and the impact that not having the certainty of what's going to happen with fiscal policy and doubts about whether Uncle Sam will pay his bills are certainly dampening consumer and business confidence.
I think that's a really important part. What consumers and businesses want to really see is a stable market and a stable economy. And so what this debt ceiling really did was really put into question whether or not the stability is there for the long term, 2, 3, 4 years out. If that stability is not there, people just are not going to be as interested in buying the next consumer good or investing in the next business asset. And I think that will really have a long-term effect overall and cause us to probably slow down our economic growth.
Exactly. And I think there's a second issue, and it has to do with the enormous size of borrowings by the government, which actually is pushing up interest rates. And whenever you see that happen, it has a negative effect in terms of capital expenditures and long-term productivity. It's a recipe for long-run economic decline and lower American living standards. Sooner or later, we're going to have to deal with a deficit, and we should get our house in order sooner rather than later.
Megan, you're absolutely right. Unfortunately, this debt ceiling crisis has shown us that both sides are polarized and unwilling to negotiate, and we are lacking in the statesmanship to handle the middle. This, in my opinion, keeps us on edge on what's going to happen, and are we going to be able to put that house in order?
Exactly. They need a little dose of the Walla Walla way.
Absolutely.
I know it sounds corny, but at least here we have a real track record of being able to work collaboratively to solve some of our toughest issues. I think kind of the third issue that was discussed at the Federal Reserve meeting was the lessons that we can learn from Europe. Unsustainable deficits can cascade into a crisis, and if that happens, policy options are limited, and the damage to the economy can really be severe.
That's an important part. What you're seeing happen in Europe and Japan as well was a point where debt got cheap. And debt is cheap relative to where we were in the 1980s or so. We're at a point now where our actual debt itself is $14.3 trillion and probably at the largest point that we've ever been at since World War II. What that means is it's been relatively cheap for us, though, as well. Interest rates have been relatively low.
Right.
But we all know that interest rates are probably going to go up in the future. And so we might as well get our fiscal house in order now and start the process. And I think that's what we're really looking at, the entire system doing.
Good point. So Baker Boyer's fiscal house is in good order. And Mark, maybe you can share a little bit of what you see with our financial performance.
I'd be happy to. And I think that's been highlighted by our recent recognition by U.S. Banker magazine that we were the 23rd highest performing community bank in the country over the last 3 years, which, as you know, was right in the middle of the Great Recession. We're doing quite well.
And we have a lot of liquidity.
Absolutely. We've upped our liquidity, as you know we do whenever the times get tight.
And I think on our side as well, on the trust side, we have clients that really rely on us for their liquidity as well. And so we've done a number of things to make sure that our clients are well positioned. Number one, we've actually stepped up our due diligence with our money markets that we're using, making sure that their liquidity is very strong. We continue to have very strong due diligence with the fund managers we're using for all of our investments. We are expanding our line of credit that we will be using just in the case that money markets aren't as stable and we may need to borrow from the bank itself to help with liquidity. And the fourth and final thing is where Mark Hess has really helped me out, and that is to actually establish and move forward on a Baker Border Bank money market account that would be available to our clients in the case that they need a secondary or third money market account. And that will be backed by the 100% by the Baker Border Bank assets and our reputation.
Excellent. So thank you both for joining me today. As you can see, our team of banking and investment professionals are working hard to protect you for today and to prepare you for the future. We live our mission, guiding you to a brighter financial future. Thank you for joining us, and take care.